What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Labs. We want to say thank you to everybody out there for tuning in. You know we come here to bring these charts to you, break them down, and show you exactly what levels you need to trade from so you can make some bread. Don't forget, tomorrow's the non-farm payrolls number. You know that we'll be trading. You know that we'll be trading live. Me and my guy D. You know I'm half for the Bison Trading Show crew. I go by the name of Ty Trades Futures, and I'm here with my guy. You there? Hello?
Yo, there's something else talking in the background.
Turn off the. You still on the Twitch website?
I don't even know, but I'm sorry for having the drag out, guys. But you know who it is, man. It's your boy D guy. Can you hear me? Can you hear me?
Yeah.
Yo, there's definitely a lag, bro.
Do
Oh,
you
hold
have
on.
you got the you still got Bison Trading up on your browser?
You know who it is, man. It's your boy D guy. Can you hear me? Can you hear me? I'm sorry about that, guys. You know who it is, man. It's your boy D guy, pulling up with you guys tonight. Hoping you guys got your pens, got your pads, and ready to get this knowledge, man. I'm sorry for the technical difficulties. We were putting a couple things together. I hope you guys can now hear us clearly. We just here and glad you guys are pulled up with us tonight, and I hope you guys are ready for tomorrow. I'm ready to get this bread, and I hope you are too.
Facts. So you know we like to start off with some good charts. Overall, let's start off with these indexes. Tonight I'm gonna bring you Dollar Swiss and US 30 just like normal. These are the pairs that we'll be trading tomorrow for our live market session. Remember, it's an early session. Non-farm payroll number coming out at 8:30, so we're gonna be on about 8:15, 8:20ish, 8:25ish. So catch us around that time. We'll break you in. We'll let you know exactly what moves need to be made so you can make some money on the charts with us. So overall, let's kick it off with the Dow Jones. Let's go to the 4 hour and so since the last time that we spoke, we were talking about how prices had pushed up into this zone, which was very important. We see this red zone at 38,800. That's significant to us because that same area, it used to be an all-time high not too long ago. So we know that in the future, these types of levels are going to come back and be extremely important. And that's exactly what we saw over these past couple of days since we last talked. So I was telling you guys to either look for the short, not short, no. Look for the long trade either at 700 or down here at 500. And we see exactly what happened. This wick came down, touched this level to the T, wick right off of it, pushed up, made a higher high, a higher low, and it continued to push up. And it really hasn't even made a higher low just yet. It's just been moving up, up, and up. So that's a good thing. That means that the trend is strong and that the bull trend is back on deck like we thought it would be. So overall, if we're looking at this pair, of course, we're looking for the long side, but we also want to be smart. We don't just want to jump in. We know that overall, we're looking for prices to come back and test this all-time high at 31,250. The question is how we're going to get there. Now, I would say based on 100, it's probably a 35 to 40% chance that prices just run all the way up to 250 at this all-time high and then pull back. But I would say it's more of a 70% chance that they maybe take a break at this level up here at 31,100 and pull back to this previous breakout candle. Because remember on Tuesday, I was telling you guys how we need confirmation above 900. Once it breaks above there, we can pretty much, I'm not going to say guarantee, but be pretty confident in the fact that prices could go up to test this all-time high. So now that we've broken past this level, we always want to look for the retest. So what we want to do is be patient, wait for prices to either come back to test 30,900, or more than likely, the move that I would wait for is for prices to come back to 800. Because remember, that's where that zone is that used to be the all-time high before. So that's going to be an important level as we move forward in the future. And you know the Dow Jones is very volatile. For prices to go from where they're at right now at 31,100 down to 30,900, that's a 200 point move. In terms of the Dow Jones, That's nothing. That can happen within the span of an hour. So let's keep that in mind about how volatile this pair is. We always want to catch it at the next level if we can. So that next level is 30,800. So overall, we're going long. We're looking for prices to pull back to 800. And if we can get all of those things, we should be good. Now let's pull it out to the daily chart just to make sure everything is all good. And from the daily, like, let's hide all of these support and resistance levels. What we see is we see prices just moving up. We had a nice V pattern reversal. And from that point on, we just saw bigger candles showing momentum, pushing the market higher, which it should be doing because it's sticking to the longer term trend of going up, making higher highs and higher lows. So far, I like what I see. Let's keep looking for those longs. 30,800 is the level that we're looking for. So D, what's your thoughts on this pair right here?
All right, man. Bring me back out to the weekly. Like I said, we've been looking at this pair for quite a while, and we definitely are very unhide the moving averages, and we're very familiar that it tends to go up, and it has been going up right now. We were in like a retracement area, but we recently broke out of a high area where the 29,000 or the 3,000 level was the last high area that the market struggled at. So that was the area we were looking for the market to break, and it finally broke in that area. So drop down to the daily. Okay, so yeah, we did get that V pattern reversal just like you said, and it lined up with the last high the market made, the last high that it made right over. So follow that price all the way over, right at that green wick right there. Nope, we just passed it. Yep, that green wick right there. It came down, hit it perfectly, came back up, broke over both moving averages. So for me, that was pretty much what I was waiting for it to come down, hit that previous high, break up past both of the moving averages, and now being that the buyers are in control, we definitely would just be looking for buy moves, like Tiberius said. So drop down to the 4 hour. So we'll just be looking for straight buy moves right now. Uh, go to the hour. Yeah, so this is where, so that area at 3,800 was the area that it just recently came out of that big, huge push up, that green candle at that high area. Yep, so that big green candle, it aligns with that last high. That's an area of duality. So anytime we see that, we know that the market, being that it broke out of that area, the market has to, what we know, to come back down and retest that level before it does continue up. Drop down to the 45 minute, because I think you said you wanted to drop down a little bit more. Yeah, so I would either want to come drop down at the 31. I don't know if that's 3,100 flat, right at the tip of the yellow moving average. Yep. So if we can get price to either come down there and respect that level, if it doesn't respect that level, the next level right below. One more time again, down again. That right there. So we'll be looking for that. So we're either going to respect the 20 moving average or the 50 moving average. I would like it to come down to the 50 moving average. That would be a great price for prices to come down. That's a nice low price, so we can hop in for a long price. So let's hop down to the 5 minute and see how low prices are. So yeah, I would definitely need it. It's definitely a little high right now because it's up at a high. It's lining up with a last high level, but I just feel like that is the most obvious level to me, right? Kind of where it's at right now, where it lines up with that high. I believe that's at 31,100. Yeah, so just come down with that high is just a little bit at the 20 right there. Yep. I feel like that's not really going to hold, so I'm definitely looking for the next high area right below it. If it could come down to there, I would want it to come back down there before we take it back up higher. But yes, I'm definitely looking for higher prices, and I definitely want prices to come back down lower, so I can buy into the dip, so we can get the market to continue back up. So to conclude, I'm looking for prices to come anywhere between the areas of 31 flat and 3150. So that entire area right there is pretty much like a box I would kind of put across and be like, all right, we definitely know it's going to come into that box, but how far into that box we just really don't know. So that's why I never want to put just one single line, because it's never really about one price. It's about a group of prices that you can definitely hop in and take prices up higher. So I'm all in for the long play.
All right, there you have it, folks. That's the analysis for the US 30, aka the Dow Jones. So let's move on to our next pair, which, if you've been following the streams, you already know we're coming up on that good old dollar Swiss. And we have some important news on this pair right here. Well, not news as in, well, I guess pun intended, haha, unintentionally. We got news tomorrow, non-farm payrolls 8:30. That's going to affect this pair a whole lot, as well as all of the US dollar pairs. Now, what's interesting on this chart is that we broke through a major level. So we were talking about how overall the trend was down, but if we look at, so let's just do a small little recap on the weekly chart. We see that the trend has been down since April of 2019. We see that prices pushed down most recently in 2020, and then they hit this consolidation period from around August to November, late November, early December. Now, the bottom for that consolidation zone was around 90 cents. So we knew that once prices broke out of that consolidation zone to the downside, they eventually had to come back and retest that level. If the sellers were serious, then they would turn around at that level and push prices back down. So that's important to take note of. So let's zoom in on the daily chart to see exactly where we're at. Right now, we came up to that 90 level and we ran straight past it. Right now, we're at about 90 and a half. So we're about 50 pips above that 90 level. So we can consider that a strong and relevant breakthrough. Like, all we have to really do is look at the pattern on the chart. We can see that right now the trend is clearly up. Even though the longer term trend is down, right now we're having a very bearish retracement. And let's take it back to the daily one more time, just to show you how, even though the trend was down, there are periods in time on this chart where the sentiment is just clearly to the upside. You can see it over here where prices formed this double bottom from August 18th. They had a nice little uptrend right there. They had an uptrend over here that lasted a few days, as well as over here in like late October. It lasted a few weeks. So overall, even though we might be in a, look, one more time, over here in March, had a huge down move and then we popped back. That was around the pandemic time. Another move right here where we go up for a countless number of days, like 5, 6, 7, 8 days. So it's important to remember that even though the trend is short on the longer term chart, we don't want to get in the way of what the intermediate term is right now in the moment. So right now, today, as of right now, we're looking for long trades. As long as this market starts to respect all of the support levels that we just broke above, which used to be resistance, as long as we respect those levels and stay above them, we should be good. So of course, you know, we love to trade off with a whole number theory. So the first couple of numbers that I'm looking for prices to come back and test, first number is 90.25. That's the quarter level right there. And then 90 cents even. That's the second level I'm looking for. I'm more so keying off of the 90 cents level. One, because from a technical perspective, it lines up more so with the chart. We can see that 90 cents occurred on an area that used to be resistance. So we can expect that to be support on the way back down. Plus, it's a whole number. If we look at 25, we can see a small little consolidation zone that formed over there. So we know that if prices come back down to those levels, they could bounce. But 90, the whole number, is always going to be stronger than the quarter, except for some certain scenarios. But overall, I would say longer term trend is down, short term trend is up. So let's keep that in mind. So whenever we're in a situation like this, it means that we can feel cool with taking a trade to the long side. But let's always be smart, because what we don't want to do is get too sucked into one mindset and say, you know what, because it's long, I'm just going to go long. We still want to keep our longer term levels in effect. So we want to look for overhead resistance so that we're not buying into those levels. So we look for those levels on the chart. We can see one of those levels at 90.65. Notice how it kind of lines up with these wicks over here throughout this whole, I would say,